Welcome back to the Sophie Investment Channel. It seems like we have a guest today.
Oh, inflation is coming off. Will the US dollar slide down? Will the bull market coming back?
Well, if you want to know about that, make sure you stay till the end of the video.
What is inflation?
Inflation is a rise in prices, which can be translated as the decline of purchasing power over time. For example, the cost of a burger, fries, and soda went up 9% from 2021 to 2022. For instance, U.S. retail gas price rose from $2.33 to $3.9 per gallon now, rising 67% since January 21st. For instance, Case-Shiller National Home Price Index rose 51% since January 21st.
So inflation bites my paycheck?
Yes, it is. Eaten up your flesh and bones.
Oh, it's terrible.
To measure inflation, the most commonly used inflation index is the Consumer Price Index, the CPI. It is a monthly index which measures the monthly change in prices paid by U.S. consumers, compiled by the Bureau of Labor Statistics, BLS, of U.S. Housing, food, automobiles, and energy are major component which represent 76% of the CPI. Since 2012, the U.S. Federal Reserve has targeted an inflation rate of 2%. Keeping inflation low is one of the Federal Reserve's dual mandate objectives, along with stable and low unemployment levels. And Federal Reserve is measuring country inflation but by PCE instead of CPI.
Why does the Fed like the PCE price index?
There are two main reasons. First, PCE is more flexible in weighing changing consumer goods and services. Second, the PCE includes more comprehensive coverage of goods and services.
What is the relations between inflation, the US dollar, and the equity market?
When inflation is up, Fed Reserve will have to raise the interest rate. Hence the US dollar will rise up but equity market will be suppressed. When inflation is down, Fed will cut the interest rate, causing the US dollar to drop down and equity market will rise up. Markets recap. Last Friday, US reported a lower than expected CPI of October at 7.7%. Expectation is 7.9%, last month is 8.2%. October Core CPI is 6.3%, expectation is 6.5%, last month is 6.6%. From the table, we can see the blue bar CPI is coming off from high 9.06% in June to now 7.75%. Core CPI, the orange bar, is steady at about 6.3%. The Fed-focused PCE is also softening from Q1 high at 7.5% to Q3 4.2%. Core PCE on the other hand is steady at 4.5% level. After the release of the CPI, CME Fed Futures is now pricing in 85% chance Fed to raise interest rate only by 0.5% in December Fed meeting. And peak interest rate level will be 5% versus the last week expectation is high at 5.5%. CME Federal Reserve Futures market expectation has shifted down from the blue line representing the expectation last week, to the current orange line. But after all, the US interest rate will still be high at 5% for a period of time. Because of the weaker than expected CPI. Last week US dollar index fell off 4%. All foreign currencies strongly rebounded against the US dollar. Yen, Swiss franc, and sterling pound are the strongest amongst the major currencies. US dollar has fallen through trading range support line at 110. Alert should be on that US dollar may be changing direction. Next key support will be 104.50, which is the 200 days moving average level. Any break below will confirm the trend of US dollar to change from UP to down in medium term. However, a 7.7% CPI is still too high a number to judge US rate hike cycle is completed and US dollar changing direction. Euro trading range between 0.9600 to 1.0150 has been breached. Next resistance at 1.0500. Any breach above will confirm euro-dollar further upside to come. Currency focus this week will be the sterling pound. On Wednesday, UK will release its October inflation report. It is expected that it will still be high above 10%. A strong number will help to uplift the sterling. On the 17th of November, Thursday, UK Chancellor Jeremy Hunt will unveil the government's fiscal plan. Hunt has junked most of his predecessor Kwasi Kwarteng's generous spending plans. And how he will uplift the UK recessing economy will be important to the sterling-pound outlook. It is expected Chancellor Hunt will propose to cut the spending and raise the tax to balance the government-heavy debts positions. However, the fiscal policy may also further drag the UK economy into recession. Slower growth will delay any central bank actions to further raise the interest, which may be negative to the sterling. Sterling has broken the trading range top at 1.1700. Some more upside room may be seen to 1.2000. Strong resistance will be at 1.2250. With inflation number and fiscal policy in sight next week, sterling is expected to trade sideways between 1.17 to 1.2000 this week. Australia will have its Reserve Bank meeting minute to release on Tuesday. On the 1st of November, the central bank only raised the interest rate by 0.25% and forecast economic slowdown. The report details may be negative to the Australian dollar. Expect Australian dollar to move sideways between 0.6580 to 0.6900. Dollar CAD also dropped below support line at 1.3500. Canadian dollar's hawkish stance and current 3.75% relatively higher interest rate will support T stronger. It is expected dollar CAD to fall further to 1.3000 level. Important numbers this week will be the Monday Australia Central Bank meeting minute, the United Kingdom October inflation number on Wednesday, and its fiscal policy statement on Thursday. Wait, remember to subscribe.